All right, today we are diving deep into a microcap stock that is right in the middle of a perfect storm of tech trends. We're talking AI, Web3, and big data. The company is Datavault AI. And the big question on everyone's mind is, does its absolutely explosive growth potential make up for some pretty significant risks? Let's get into it.
Welcome to ValueVest Daily. This is the place where we break down the best value and momentum investment opportunities out there. So today, our focus is squarely on Datavault AI, ticker DVLT. Now, this is a fascinating and I mean extremely volatile company. We're going to dig into the fundamentals, we'll look at the chart, and we'll see if that massive potential upside is really worth the roller coaster ride.
Okay, so first things first, what problem is DVLT even trying to solve? Well, it all comes down to the absolute chaos of big data. I mean, we are drowning in this messy, disorganized data economy, and this company says it has the key to finally unlock its true value, and they're doing it using a really potent combination of AI and Web3 tech.
So at its core, Datavault AI is mashing together three of the hottest trends in technology right now. It uses artificial intelligence to make sense of data, it uses blockchain to keep it secure, and it provides a platform to actually monetize that data. So, in plain English, they've basically built a secure marketplace where data can be stored, valued, and traded just like you would with any other asset. Pretty cool, right?
You know, the best way to think about their competitive advantage, what we investors call a moat, is this. DVLT is building the Fort Knox for the new data economy. Their proprietary data vaults use blockchain to prove ownership and AI to analyze and monetize all that information, all while keeping user privacy intact. In today's world, that combination is incredibly powerful.
But hey, a great idea doesn't mean a thing without execution, right? So how does this all translate into a real, high-growth business? Let's get into the numbers, because honestly, the growth story here is, well, it's nothing short of staggering.
Get this. The projected revenue growth for 2025 is a jaw-dropping 435%. Now, this isn't just steady growth, okay? This is what it looks like when a company hits a major inflection point. They are scaling at an incredible pace, and a lot of that is being driven by the launch of their new data exchanges.
And this isn't just some one-time pop. Their main subscription and licensing model is projected to grow at a compound annual growth rate of 250%. Now that points to strong, predictable, recurring revenue, which is exactly what long-term investors love to see.
And here you can really see that incredible acceleration. Look at that jump from 148% revenue growth this year to a projected 435% next year. But I want you to focus on that profit line. The loss per share is projected to shrink by 96%. That tells us they're scaling efficiently and they're on a very rapid path towards actually becoming profitable.
And this growth isn't just some forecast on a spreadsheet. It's already happening. Their last earnings report back in August was a total blowout. Revenues shot up 467% year over year, completely smashing estimates and sending the stock rocketing up 25%. So you can bet all eyes are on their next report coming up on November 14th.
So we've covered the why behind the company. Now let's talk about the when, by decoding the stock chart. And let me tell you, this chart tells a very, very dramatic story of meteoric rises and some sharp, sudden falls.
The last few months have been a real roller coaster. After those killer earnings, the company raised its guidance, which caused an 80% spike in the stock. Then they followed up with a big strategic acquisition. But then on Halloween of all days, the short seller firm Wolfpack Research dropped this critical report that just tanked the stock by 41%. Now, DVLT has since fought back against those claims, but man, it just highlights the extreme volatility we're dealing with here.
So where does that lead the stock right now? Well, the key support level you really want to watch is right around $1.90. That's a huge volume area where a ton of shares have traded hands, which suggests buyers are ready to step in there. On the upside, it really needs to break through that resistance at $2.08 to get its momentum back, with the ultimate target, of course, being its recent high of $2.77.
Okay, so a key question for any small company like this is whether the so-called smart money is getting involved. I mean, are the big institutional investors buying into this growth story? Let's take a quick look. So institutional ownership is still really low, at just under 2%. But look, that's perfectly normal for a company this size. The important thing isn't the current level so much as the direction it's heading.
And here's the interesting part. Right in the middle of all that chaos last quarter, institutions were actually net buyers. Firms like AMH Equity and SG Americas added about 115,000 shares combined. Now, what does that tell you? It suggests they saw that dip caused by the short report as a buying opportunity.
All right, so looking ahead, what could actually push this stock higher? Let's break down the upcoming catalysts and see what the analysts are projecting for the stock price.
There are several potential catalysts just waiting on the horizon. The launch of 4 new data exchanges this quarter, that's the big one. Success there could be a major turning point. Beyond that, a smooth integration of their new acquisition, getting some positive results from their partnership with IBM, and, oh yeah, even a potential short squeeze could all act as major tailwinds for this stock.
So, based on all these potential catalysts, the short-term consensus price target is sitting right at $3. From where the stock is today, that's a potential 50% upside over the next 6 to 12 months. Not bad.
But here's where it gets really exciting. The long-term, 3-year bullish price target is $7. So if Datavault AI can execute on its plan and Web3 adoption keeps growing, that implies a potential 245% upside from where we are today. That's a massive potential reward. But of course, an opportunity for that kind of insane return does not come without some serious risk. We have to be really clear-eyed about the major hurdles this company has to overcome to even get close to those bullish targets.
Look, this is a high-wire act. The company is burning through cash to fund all this growth, so execution is literally everything. They've also been issuing new shares, which can dilute existing shareholders. They're also facing some stiff competition from giants like Snowflake and established Web3 players like Chainlink. And as we just saw, this stock is highly vulnerable to market sentiment and short attacks.
Which brings us to the final question, doesn't it? On one hand, you have a company with a potentially powerful moat and just explosive growth. On the other, it's facing huge execution hurdles and market risks. So, is Datavault AI a smart speculation for a small spot in your portfolio?
Now, please remember, this analysis is for informational purposes only. It is definitely not financial advice. You should always do your own thorough research before you make any investment decisions.
If you found this deep dive helpful, do us a huge favor and please subscribe, like, and share ValueVest Daily. It helps us keep finding these daily opportunities for you before you put your hard-earned money to work.
Oh, and one more thing. If there's a specific ticker symbol you want us to break down next, just drop it in the comments below. We read every single one of them. Thanks so much for watching.